Hello investors, this is a video on Linc Limited. This video is brought to you by SmartInvestor. Like our videos, share our videos and subscribe to our channel. Click on the bell icon for new video notification. This video is based on the investor presentation submitted by the company to the stock exchanges. This video covers the performance of the company for the first half of FY24 and second quarter of FY24. This slide is about the writing instruments and the future. It has got a cultural significance. It is widely used in the education sector, used in corporate use and corporate gifting and promotions. Let us look at the global scenario of stationery and products and pens. The stationery industry is divided into paper and non-paper stationery, the latter accounting for the larger share. US market is estimated at $52 billion in 2020. China market is projected to grow at a CAGR of 3.6% to reach US $42 billion during 2020 to 27 period. Japan to grow at 0.2%, Canada to grow at 1.3%, and Germany to grow at 0.7% during this period. Writing and marking instruments market share in the USA is estimated to be at 4.7 billion in the year 2022. China is forecasted to reach a projected market size of $8.7 billion by the year 2030 at a CAGR of 14.7% by 2030. Japan and Canada each forecasted to grow at 4.6% and 7.7% respectively over the 20-30 period, while Germany is forecasted to grow at 5.6% CAGR. Market scope for corporate gifting is at $120 billion. Coloring instrument demand growing faster due to surge in demand for highlighters, markers, etc. Pens continues to be the largest segment at 60% growth. Writing instruments market growth drivers include rising populations. Largest population in age bracket of 5 to 24 years is expected to be 580 million. Indian working population to grow 20% and education market to grow 14%. The demand for writing instrument is expected to be very strong. Over 250 million school-going children and 38 million students enrolled in higher education. Rising literacy, government of initiatives such as Sarva Shiksha Abhiyan has strengthened India's literacy from 65% in 2001 to 77.70% in 2021. The objective of attaining 100% levels by 2025 has a positive impact on the writing instrument sector. Educational spending budget estimates for 23-24 show that the government will spend 1.12 lakh crore in the coming fiscal on education, the highest ever and an increase of 8.2% than what was pegged in 22 and 23. National Education Policy 2020 aims to achieve 100% GER by 2030 in preschool secondary level. Policy also seeks to increase public investment in education to 6% of GDP from 2.5% in fiscal 2024 budgetary estimates. The Indian pen segment demand is driven by students and working class population. As of FY23, pens occupy 65% share in writing instruments and expected to increase market share to 68% by FY28. Pen market is expected to grow at CAGR of 7.5% to 8.5% from 43.1 billion in FY23 to 62 to 65 billion in FY28. Indian pencil segment is a primary writing instrument till class 5 and hence demand is driven by students in class 5 and below. Wooden pencils continue to dominate the market despite innovations like mechanical pencils. Pencils are expected to grow at a CAGR of 4.5% to 5.5% from 18.2 billion in FY23 to 23.24 billion in FY28. Indian marker and highliner segment are primarily used by office users, whiteboard markers being the most popular choice in office workers and students. Marker and highlighter market is expected to grow at a CAGR of 5% to 6.5% from 5.1 billion in FY23 to 7 billion in FY28. Indian writing instrument overall is MRP is 26.9, and in FY22 it is 42.5, in FY23 it's 60.4, and in FY28 F is 87 to 90 billion. CAGR is at 7.6% to 8.3%. Indian pen industry is characterized by a wide range of options at various price points, each with distinctive value propositions. Market for pen below 15 rupees growing at 8% and above 15 rupees is growing at 10%. Linc, Cello, Flair and Reynolds are the major players in the Indian pen market in the mass segment category. Numerous brands offer bundled packs of 5 pieces or above, allowing them to pricing units at odd multiples. Indian pen market segment is equal to premium is at 15 to 20%, mid is 15 to 20%, and mass, which is below 15 rupees, is 70 to 75% in the FY23. Pen segments mass market is at 5 to 15, mid-term is rupees 60 to 100, and premium is above 100 rupees. Mass market pens are driven by volume. This segment is highly competitive. It is difficult to increase the price without losing significant sales. Students drive the demand. Deep retail penetration is essential. Premium pens are driven by price. This segment is characterized by high demand leverage as the premium is built on product branding, focus is on professionals and corporate gifting solutions. This is a company journey which was founded in 1976, launched Linc Supreme in 1978, Linc got listed in 94, Ocean Gel is launched in FY03, Linc Lysar is in FY03, Mitsubishi acquired 13% stake in Linc, and company is planning to launch planned Pentonic GRD at Rs 40, a retractable gel pen. Portfolio products of the company include Linc among top 3 brands in India for writing instruments, presence in the affordable segment for over 4 decades. Pentonic is a new writing instrument launched in FY19, an MRP of 10 rupees and above segment, known for its superior smooth writing and sleek design. Mitsubishi Pencil is a collaboration with Mitsubishi Pencil Company, Japan. Presence across all writing instruments, roller pen, gel pen and ball pen. Deli is Asia's largest stationery giant. Presence across stationery categories with over 2,000 products. Pentonic's upcoming launches include Pentonic GRT, priced at 40 rupees. And in Q2 FY24, the company is planning new releases in Q3 FY24, Pentonic ball pen and Pentonic BRT 20 rupees ball pen, and Q4 FY24, rupees 30 rupees ball pen and 20 rupees ball pen are scheduled to be launched by the company. Why Linc? Let us look at the factors that make a Linc an attractive investment solution in the writing industry. Focus on premiumization, consistently augmenting the contribution of high margin products to its overall revenue. Inroads into stationery products, wide range product portfolio started, rapidly expanding distribution network, 1.7 lakh touch points over last 4 years. Geographic expansion, focusing on increasing its exports revenue and developing newer markets. The company has a strong balance sheet with zero debt and free cash in hand. Strong top and bottom line growth. Focus on ESG. The company has soon launched a Pentonic with 83% rPET. Pentonic brand introduced FI19 as a minimalistic yet contemporary pen known for its aesthetics as well as rating products. The growth has been phenomenal since the last 5 years. From 5.53 it has grown up to 5.78. The company is focusing on premiumization with the number of pens growing from 6,110 lakhs to 7,600 lakhs in FY23. Increase in share of Pentonic in total revenue led to higher gross profit margin for the company. New launches in the upcoming quarters will drive premiumization. In the first half FY24, the company's gross profit margin has increased to 32.7 and Pentonic share is 32.7 out of 30.6 growth. Increasing global footprint, global ball pen demand expected to grow at CAGR of 12.5% in the next 7 to 8 years. Demand to grow faster in the developing world, increasing literacy in the developing world to drive its growth. Company was excellent opportunity to increase exports to the developing world, while overall exports of pens from India grew by 30% in 2022 to South Africa, Middle East, Southeast Asia and SA. Linc exports are at 3808 lakhs, is 16% of its revenue in first half of FY24. To improve penetration in the fast-growing African market, the company has acquired majority stake in Kenyan manufacturer and seller of writing instruments. Enrolled into stationery products targeting 1 billion revenue from DELI by FY26. DELI offers a range of 200 products in India. Company to largely focus on calculators and scissors. DELI should contribute at least 10% of the company's revenue from FY25. DELI GPM is around 20%. Deli has achieved revenue of 161 crores in first half FY24. The company is focused on creating shareholder value. Net cash from operations versus dividend payout is shown here. Net capital and from operations continues to be strong in first half FY24. Consistent dividend payout track record. Steady and significant decrease in net debt. NCOI has judiciously reduced the debt. The company has become debt-free as of 30th September 2023. CapEx commitment funded largely through internal cash accruals. Net debt generation EBITDA reduced margin significantly from peak of 2.54 in FY24 to first half of 2024. Increased touch points has over 10 million stationery outlets, broken tradition by expanding to neighborhood stores, kirana, medical stores, pawn stores. Already crossed the milestone of 1 lakh non-stationery outlets. Focus will be on increasing revenue per touch point. Breakup across India is South India is 21%, East India is 24%, West India is 29%, and North India stands at 26%. The revenue share of FY19 include from South it is 13% and West India is 14% and North India is 31%. Revenue share in H1 FY24 include East India at 31%, North India is 31%, West India is 21% and South India stands at 17%. The company shareholding pattern include 59.3% held by promoters. A small portion is by Mitsubishi Pencil, IEPF. Other public is 24.8%. This is as of 30th December 2023. Let us evaluate the performance of the company in the stock market. The scrip is currently trading at 692, a growth of 256 rupees or 58% in the last 1 year. The scrip had a year high of 860 rupees and a year low of 652 rupees, currently trading near to the year low. In the last 6 months, the share price has given negative returns of minus 10.84%. In the last 1 month, the share has lost less than 1%. The Indian writing industry and demand for pens are likely to go up, and hence investors can look at this script for adding to their long-term portfolio. This video is for education purpose. For any investment decisions, you are suggested to meet with a financial advisor and take investment decision. This video is brought to you by SmartInvestor. Like our videos, share our videos, subscribe to our channel. Click on the bell icon for new video notifications. Thank you.